Morning all. How are you doing? So I've got a cold today. My cold's come out. Been building up all been building up all week. So I am officially man flu. How are we all doing? Morning Danny. Morning Paul, FTNet, JC, Gregors. How are we doing? Welcome to Rodrigo Ike. Welcome to the private streams. Hopefully see you in a minute. Well, not in a minute, at 9 o'clock in the member stream. So today is Thursday. Morning, Gregors. I've already said that, have I? I'm a little bit lem-sipped up this morning, so you have to excuse me. Morning, Virginia. So today is Thursday. We have coming up today CPI. So big day today. The Fed basically are anticipating dropping rates by potentially 0.5% in the next drop, and this figure is what they'll be watching today to decide whether or not that is viable. So if the CPI figure comes out as forecast or around about, that will indicate a 0.5% drop potentially on the cards. If it goes up substantially, then it may slow the rate of drops, meaning that we'll get a little bit of a bullish movement on the US dollar. So could be potentially quite a big move this afternoon. So what's your US dollar exposure? We've had obviously quite a big down movement in the US. Big up movement in the US in the last week. So potentially this could all unravel today. So we'll see what happens. But I've got 3 shorts on this US dollar CAD at the moment. It's running away a little bit. Next position is about to go on. Literally is about to go on in the next quarter of an hour or so. Well, whenever the next bear move comes, basically. So I'll be getting into 4th short on this US CAD this afternoon. I'm a little bit overexposed on the US dollar. I've let the EA get a little bit carried away on it, which is a bit worrying, but hoping to get some retracement. As you can see, we've got a hell of a move on this US CAD specifically. We were on day 1, 2, 3, 4, 5, 6. 6 days straight up. So when you look at this on a daily chart, it's incredibly extended. So, you know, when you go back in time and look historically, you get the odd run like this, but vast majority of the time, 4 or 5 days in a row typically tends to be the norm, basically, before you get some kind of retracement. It's very hard for the market to rally in the same direction for more than 4 or 5 days because there's just nobody left the other side to take those orders because you've had them all. So this is a big run here. So we're looking for a pullback on this, and it may be they use CPI regardless of what it is to just start taking profit on some of this potentially before putting another leg in. However, we are bearish US. So if we have a quick look at the overnight news, we had more talk overnight about dropping rates. I don't think they've highlighted it in red. No, they didn't. But we've had more talk about the 0.5% rate cut and how it's becoming a little bit more likely that we're going to get that 0.5% rate cut. So other overnight news, there isn't really anything there. If we look through it, it's not a lot. This is the FOMC from last night. So we had the FOMC meeting minutes last night. Didn't really do an awful lot. There was nothing really exciting in there. So no reason for the market to move. But I did see, is it recent this morning? Where was it? I'm just looking back on my feed on Discord because I spotted it on Discord. Yeah, so Fed's daily backs a 0.5% rate cut. So we've got more Fed members basically looking at 0.5%. So there you go. So that's your overnight news. Obviously, in the US today, we've got the hurricane hitting. So natural disasters can cause chaos in the markets. It depends on where they hit, how impactful they are, and at the end of the day, what the cost is. So obviously, if you have suddenly a bill for 5 billion that you weren't expecting, does tend to put a bit of a strain on the economy. So it depends what happens with this hurricane. It looks like it's being quite devastating at the moment. And obviously hitting infrastructure and economy will obviously weaken. So there is potential for weakness in the US on that as well. But it doesn't, it's very hit and miss with that sort of thing. So just be aware of it. Morning, Harold. Sarah, Forex Fire, morning. So basically that's your overnight news, and obviously the main focus today is going to be on CPI. Nothing much happened last night on that. If we look at something like the pound US dollar last night, obviously this was around about 7 o'clock. As you can see, there was no impact. We didn't get anything off of FOMC, so the market didn't even really sneeze on it. So there we go. So that's your overnight news and what we've got coming up today. This morning, I've banked a couple this morning. Pound New Zealand. I posted these in Discord, but there was an extension on the hourly yesterday out of this propulsion move that we had. And the 4-hour extension was the reason I got into it. I decided to close it out this morning because I've got a little bit too much on the New Zealand dollar as well. So I just took that one off, basically. 0.4, and it was euro odd was the other. So this euro odd I got into on Tuesday after this big ADR move to the upside. So that gave us an extension on the hourly, but obviously on the 4-hour it was the extension. That's why I took it, because I'm taking H4 at the moment. So nice big extension to the upside. And then it continued to rally. So first entry was taken here. Then it absolutely flew on the back of the Australian news this week. So second entry went in same day, and we sat around all day yesterday. So I decided this morning just to take that one off, just to bank a little bit on it. And I will obviously add it back on if we push back up and retest this propulsion, or test Tuesday's high, which is the weekly high, or ADR today, which is basically this whole area up here. If we push back up here, I'll add that position back on again and obviously bank it twice, just make twice as much out of it. But the reason I took that one off is because this propulsion move here, it's easier to see on a 4-hour chart. So this is the propulsion move that we had, which broke out of the accumulation from the back end of last week. We tested it. News pushed up, we came back, added more volume, we came back, and it looks like on the 4-hour candle right now that they might be adding more volume. So this may hold this propulsion gap, and if it does, obviously we're going to look at testing and or breaking that high. So it makes sense to take this profit off in case that happens. If that doesn't happen and it pushes down and completes the propulsion gap, then I just close that order out and it's just profit anyway. So banking as you go when you're seeing price action unfolding is obviously just a good way of just getting money in the bank. You can always add it back on and take it twice, make twice as much money, or not. Just get out with a small amount on the second position. So I posted that one as well. So I've taken that off this morning. ADRs today, there aren't any. So Asian session, fairly quiet. Nothing has hit ADR at all today. Biggest movers so far today, not a lot, really. Pound New Zealand, basically, by the looks of things, which is what I've taken off. So, yeah, nothing really exciting happening today. Weeklies, Pound New Zealand. So that is a weekly range hit. So we are down Monday. So that's your weekly range been hit. Obviously, yesterday, and again, obviously got in. So you're going to find, this is why I keep saying when you're looking at the strategies that I teach in the bootcamp and position trading strategies, you're going to get very similar entries on all of the ways that I sort of give as examples. So taking ADRs, taking AWRs, taking RSI extensions on the hourly, RSI extensions on the 4 hourly, monthly extensions. They're all going to give you the same thing. They're extensions. All we're looking for is the market to be stretched in one direction and wait for that profit take pullback to come in. So that is a weekly AWR entry. You could have taken the ADR entry yesterday. You could have taken the H1 extension yesterday. You could have taken the 4-hour extension yesterday. It doesn't matter how you got in. You got in because this thing's gone parabolic. Can't carry on. So all the same thing. Doesn't matter which entry you take. It doesn't matter whether you take a reversal alert or whether you take an MA cross entry. You're looking for bears to enter on bullish movement. So US dollar CAD, that's also hit its weekly range. This thing's not stopping. It's just parabolic. I'm not quite sure why this is so strong at the moment. It's a real mixed bag, the US dollar. If you look at the US dollar, it is fairly strong. But the Canadian dollar, I wouldn't say is particularly massively weak at the moment when you look at it. But the US dollar CAD, absolutely parabolic. You've got literally 1, 2, 3, 4, 5 4-hour candles in the last week and a half. Bearish. It's just off the scale. The thing's gone mad. So fourth entry is going to be going on that one today. Very big move. Obviously, as you can see, it does happen. But we've got no real resistance to the upside coming up on this one. So we've got this kind of accumulation here where we sat around in balance, which was here for a week and a bit. Then we broke down. So there is potential this zone that we're entering into now is going to become resistive because the sellers, obviously, that broke here, these propulsion moves, which we are filling right now on the 4-hour, potentially, if we're going to continue bearish market structure, as we should be with the US dollar, that's where we're going to drop from. So we'll see. Sorry, I just remembered my FTSE trades on. So long on the FTSE. Not really gone anywhere. Last 10 minutes. So we're bullish on FTSE this morning. Long break. Just broken along on the DAX as well. Not really going anywhere. CPI day, obviously, it tends to be a bit flat because obviously the market's waiting for the CPI number before they start putting any big orders in. So we'll wait and see what happens. But certainly looks like the US dollar's taken off a little bit this morning. So is the Swiss franc. And so is the yen. So Swiss franc strength coming in this morning, along with the yen. Sorry. Man flu. Morning, Potty J. Morning, XRupdate.news. Joe Roger. Baggy, welcome. Morning. So those are your ADRs and your AWRs. Monthlies, we've only got the one. He says there's two now, isn't there? We've got obviously New Zealand dollar CAD as well now. So New Zealand US and New Zealand CAD. So these are monthly range hits. Again, got two on that one at the moment. So monthly start is there. Yeah. So we've done our entire month's range in 1, 2, 3, 4, 5, 6, 7 days. And the same with the New Zealand dollar. What was the other one? New Zealand US and New Zealand CAD. So New Zealand US and New Zealand CAD, yeah. So again, weekly range is already done. So nice pullback starting on that one. And again, got 3 on that one long at the moment. Not far away from break even on that. Break even, unfortunately, is a resistance. So this one got longs on at the moment. So I was looking at this yesterday down here. And I was so close to taking another position. It was a little bit too close. And I was like, this looks like it's stalling down here. I might take another one. And I didn't take it. And it did that. Which is annoying because that would have given me a break even pretty much where we are now. But yeah, so got 3 positions on that at the moment. This propulsion move down is definitely getting added to, as you can see. So they are very, very bearish at that level. And that just happens to be my average price. So if we get back here, there's a chance that it's going to go bear. So I'm going to take that one off here. And in fact, what I'll do is I will monitor this today, because if we're sitting here and we are at that point, when we get the CPI number. So basically, if we can get an ADR on this by the time CPI is released at 1:30 this afternoon, I'll take that position off completely, because if the news goes against me, I'll add that position back on again, which is not a problem. If the news goes my way, it's going to get me out of both of these positions, because we'll probably get an ADR run up to 175, 200 ADR. We'll at least fill that propulsion gap. So if I take the profit on that one there, and then if worst case scenario, I'll just get out there, which will be pretty much break even on those two, that is the profit. So it becomes a profitable trade anyway. So just waiting for some movement. We've been stuck all week on this one. So those are your monthlies. RSIs today, there's not a lot to look at. We've got the hourly extension on the US dollar CAD and the 4-hour extension on the US dollar CAD. So it's all about the US dollar CAD. All the other trades this week have pretty much all played out. So I'm up 2.8 on the week. Good week. But all the extensions I'm either waiting on at the moment, or they've already played out. So already banked a fair bit this week. But this is your main issue at the moment. US dollar CAD, as you can see, it's embedded on the hourly. So we've been embedded now for about 5 or 6 days on the RSI on the hourly. Obviously, that is massive bear divergence. But we're not getting any relief at the moment on this one. And 4-hour, we are, out in the clouds, basically. If you look at this level we're at now, and look historically for the last, this is going back basically a year and a half-ish, back to July. So about a year and a quarter. This is the largest sustained relative strength move we've had on this pair in the last year or so. So this is a very big parabolic move. Very big parabolic moves tend to have very big parabolic corrections. Yeah. Parabolic correction, parabolic correction, parabolic correction, parabolic. So it will come. It's just a case of we need some news catalyst to drive it. And obviously CPI today potentially is it. Don't forget, US is bearish because they're dropping interest rates. And they're dropping interest rates faster and quicker. Faster and further than the market had initially anticipated. So that is the reaction we should be seeing. At the moment, we're seeing a parabolic upward movement, which doesn't add up with fundamentals, especially with what's going on with the hurricane at the moment. That tends to devalue currency when you get emergency situations with things like that as well. So, should be doing that. So we're just waiting for that move to get profit taken, and it could be a fairly big one. So one of those, when it starts off, you kind of want to sit there and hope you get a good 200 ADR out of it. But if we get bullish news today, if that CPI number pops today, it's going to create potentially a slight bullish stance on the US, because instead of that 0.5 drop in the rates next time, we might get a quarter. And if that's the case, the market will probably want to go into an accumulation, because it's already made a move to the upside. So it may be that they're anticipating not that, but that. And if the CPI number comes out positive today, they've got their confirmation and they've already factored that move in. So it'd be an accumulation and then wait to see what happens next. But we are dropping rates, so it is bearish. So there you go. So that's your RSIs today. There's only that one, really. The other ones which are getting close are Euro US. And that's not getting close. I'm already in that. Excuse me. So this was a nice big extension on the end of last week. So I'm in this long here. And I'm waiting for some kind of correction on this. Again, weakness in the US dollar is going to move this. Euro is weak. We know that. We're just waiting for some weakness to enter the US dollar. So, and that will obviously correct. Watching these levels here, basically, which is 225 ADR from where we are at the moment. I'm not targeting that. I don't need to go anywhere near that high. 175 ADR, decent target on it. And US dollar yen. That one's also an extension on the 4-hour, just up in the 70 level. So good potential short opportunity there. Watch where we are here. Yeah, so we are very close to 150. So that's your 150 level. That is the previous intervention level. So we are well within an ADR of hitting that today. if we scream through that on CPI on some bullish US, the Japanese, like clockwork, tomorrow morning we'll be looking at the Japanese mentioning Forex movements. So, in fact, let's see if they've actually said anything overnight about concern over Forex movement. No, doesn't look like they did. So they will. So if we get back to that 150 level, they'll start moaning. When they start moaning, it's an indication of them pressing the button to liquidate assets and drive the yen. So we'll see, but we're getting very close to that level. That's an area of interest. So we are extended on the 4 hour. If we can tip ourselves above that 80 level and get that 150 hit, I think we'll probably find a nice big correction starts at that level. Big round number. Market loves big round numbers. So we'll see what happens. But I'm not really getting in the yen at the moment. The EA is not running on any yen pairs for me. I'm not interested in the yen at the moment. I don't really know which way it's going and how it's being driven at the moment. So I'm just waiting to see what happens. Also, very nice resistance we're at. Look. So we've got nice price action at resistance there. Funnily enough, we're covering that in today's member stream. So yeah, beautiful price action at resistance. So yeah, looks like a good short right now, but I get the feeling they're going to want to test that 150 level. They love that 150 level. So we'll see. So yeah, if you're watching this on replay, got any questions, stick them in the comments section. Members stream today at 9 o'clock is identifying good trading levels and when not to trade. The most important bit is when not to trade. So, and we're also potentially today going to cover targets for existing price action trades and why they work. So they're kind of the same thing. So I'm hoping to try and get both of those sessions done today at 9 o'clock. And then we can tomorrow spend some time going over what we've done this week, which is price action, and basically do some live price action scalping. So that would be good. But we could always use the backtester to do the scalping anyway with the price action toolkit. So we'll see where we go. See how far we get today. Hedged on the DAX today. No real momentum today. It's been a very, very difficult week this week. I've had a lot of hedges this week. Most of them have played out really well. I did get stuck in the FTSE yesterday, though. Had to take a loss on the FTSE of a K yesterday. I got out of the longs here. In propulsion, we looked like we were having a nice rejection at propulsion there. So it didn't actually play out. We pushed up again. So unfortunately made a loss on that one yesterday. DAX yesterday. What happened on the DAX yesterday? Oh yeah, about 150 odd profit on that. It was a clean break south, but didn't actually, just took me out on a trailer. Nasdaq yesterday was break even. Dow yesterday was a nice profit. So yeah, Dow made a nice, actually no, sorry, Nasdaq yesterday. Yeah, that was a break even. And the Dow yesterday was a nice profit. It's behind my head, isn't it? So yeah, nice clean move on the Dow yesterday. So with this one yesterday, got hedged at the open. So basically we broke short, went short, then it immediately flipped long and went long. So I got out of the short here. So we pushed up, pulled back into propulsion. This big bull candle was enough for me. So basically, as soon as I saw that rejection, or rather add into the propulsion move, I exited the shorts and then I held the longs up to there. So that was about 600 profit. So overall yesterday, I think I came out about a 350 loss, which considering what the FTSE did yesterday, I was very happy with. And considering I had 3 out of 4 hedges yesterday. Yeah. So it just goes to show with this strategy, the beauty of it is when you get hedged, it buys you that time to sit there and go, right, let's have a look at what this market's doing and play all the indices off against each other. So I had 3 out of 4 hedge and I just made a 350 loss, which was, to me, a result. You know, the days where we get the 4 clean breaks, every single one of them driving to $1,200 or pounds, because this is a pound account. You know, those days are what pay you, but you've just got to deal with the ones that get stuck, like the DAX today. So today's DAX play, obviously looking at the DAX where we are at the minute, we're kind of flip-flopping around at the moment. So we're just trying to break out of this level. We've hit this resistance again and rejected. So I'll be looking at this area here for some kind of potential bounce play today. So this is the previous day's high. So this is the high from Tuesday. We hit that yesterday and then broke out of it in New York. So I'll be looking for them to rebuy Tuesday's high, which also was the area we hit at New York on Monday and rejected. So this is this level here. So it's a very strong level of resistance. We've broken through it and it's held multiple times. So as we finally now have got market structure broken long, we're expanding here. Yeah, we'll be looking for this to push down and continue, or to do a further expansion and come back down here somewhere. So market's expanding but not directional. So that is probably about 3R. Yeah, 2.5-ish R. So this area here is potential for, if it comes down screaming down hard into this level, there's a good chance we're going to get a bounce here. But the danger today, and what I think is more likely to happen, is this. We just go into rotation because it's CPI day. The market's not going to want to drive a ton of money into the market. So until we get that CPI number. So I'm going to put it there and see if we can get exit and a bounce play on that. I may have to re-hedge it if it goes really heavy. Upside, absolutely fine where we are. So that's 5R to the upside, just shy of ADR and this high. So if we get to that level, we're looking for exhaustion. Limit orders sitting at that high. We've got a propulsion move there they may well add into as well. So if they get through that level, they'll be exhausted by the time they get there, and I'll be looking for a short. And FTSE, obviously, is just going nowhere. So, yeah, looking for this propulsion gap bounce to hold today. Normal 5R. But we'll see. Not really much momentum today, unfortunately. Wayne, talking about targets, you often talk about ADR. If the trade is not behaving as you like, will you take a quarter ATR or half? What's the minimum you look for? I don't have a minimum. It's discretion, really. So if something's not working, I'll get out. But it all depends. There's too many factors, and this is the problem with trading. Yeah, I don't know any trader ever. I've never met a trader ever that doesn't use discretion in their trading. It's the job. Yeah, this is why nobody makes the same amount of money. Yeah, if there was a way that you could place an EA on a chart and it just generate income, we would all be sitting here earning the same amount of money. But then again, we wouldn't, would we? Because who'd take the other side of our trades if it was that simple? Yeah, so you've got to have discretion in it. This is why in the bootcamp I say you will have a comfort level. When you look at your P&L, I'm sitting here on 2.8% drawdown on that, comfortable. Some people will be sitting in 2.8%, papping themselves. Like, oh, I've got this. I've got 3 trades on. It's in 3% drawdown. What do I do? Wait. See what happens. I don't know what's going to happen, but what I do know is this thing's been going parabolic for 6 days, 7 days, and we've got a CPI number coming up. I'm just about to take my 4th entry and move my average up to ADR. And as long as I have an average around about ADR, I know that all the market's got to do is have 1 down day and I'm out. That's it. I'm waiting for the market to take profit on all of this money. Banks are sitting on a fortune in long positions. they're going to bank that at some point. That's what I'm going to make my money on when they bank. So it's discretionary. But if I see a trade that is sitting flip-flopping around, and it's been sitting flip-flopping around for absolutely ages, like that one I took off on the Euro odd today, yeah, this isn't really flip-flopping around, but it's 300 and whatever it was. I don't know what it was. It was $340, yeah, sitting in my P&L, but I'm watching price bounce out of a propulsion move, and I've just watched it bounce out of that propulsion move again, and I'm thinking I can either have $340 now and the opportunity to put it on again and take $340 again, either later today or tomorrow, or I can take the $340 and be wrong and price isn't going to bounce and it will push down and I'll take $100 odd on that trade as well. That's my decision. I have no clue which way this is going, but my decision based on my P&L and how my week, month is going, what my drawdown is and how everything else is going, my exposure and everything, is made me make that decision. I don't know if it's right or wrong. This is what I keep trying to get across to everybody out there. There isn't any trading system out there that works. However, every trading system out there also works, because when you enter a trade, it's got nothing to do with what happens when you enter the trade. When I entered that trade there, I was expecting a test of this level. I got what I wanted. However, I'm not seeing what I want. So I've decided to exit. Someone else is sitting in this trade right now, not watching this stream at work, and at lunchtime they're going to check their P&L and price is going to be at ADR. They'll be going, hoo, that was a lovely little trade, that was. They'll have made more money than me. But it's not down to anything other than my decision-making process as to why I make money. Yeah, but I don't put orders that stop me out. That's the difference. I wait for the market to prove me right or prove me wrong, and then I adjust my position based on what I anticipate the market's next move is going to be. That's literally it. So there's no, I'm not going to take it if it's 200, or I'm not going to take it if it's less than 600, or I need it to be $1,000 before I'm interested in taking it. It's a case of how's my day, week, month going, and what do I think's happening? Today we've got CPI coming, so I want money here ahead of CPI. If that is still green at 300, it's going down there before CPI, because it can turn into a negative 600 by the end of the day, or these two can turn into positive 1,000, and I would have gone, oh crap, that could have been $2,000. I don't know, but what I do know is that is spendable. Drawdown isn't. Yeah, so you just take the money. This, I'm looking at this Aussie New Zealand now, and I think I've put a break even on this. Yeah, I have. So I've just put a break even on this morning because I'm seeing this. We've been covering price action in the members streams all week. I'm seeing indecision. Yeah, I'm seeing chop. I'm seeing a massive propulsion move, but I'm seeing myself short on a bullish pair. New Zealand are dropping their interest rates. Aussies are not. This is bullish. We've had a large bull move out of news, and I'm seeing the market flagging with indecision. I've decided to do that. I don't know if it's the right thing to do or not. Yeah, it's an H4 RSI extension. I'm expecting them to test this propulsion and probably do that. However, at the moment, it looks like it might just flag and break, because at the moment, the market is not sure what it wants to do. For 4 hours, it's been sitting there going long, short, long, short, long, short, which tells me there is balance in the market. After balance comes price discovery. Price discovery will be that way or that way. So for me, this trade working would be that. It's stalling, I don't know, and I have a lot of New Zealand exposure on, so that's the reason for the break even on it. Now I could just take that and go, screw it, I'll take the 100. But I'm not doing it because I've already banked 700 this morning and I'm up 2.8 on the week. If I hadn't banked anything this morning and I was only up 0.5 on the week, I'd probably think I'll just put that down there because I need the money. But I don't. So my decision-making process is made by what's going on here, news today, exposure. There's a million things that go into the thought process. But none of them are right or wrong. I haven't got a clue where this is going. Neither of you. You have to just make decisions. And that's what makes you either very profitable or slightly profitable. Yeah. And this is the difference between good traders and bad traders. And a lot of the guy, like I said about the person sitting at work right now in that euro odd trade, right? The person sitting at work now hasn't got a choice. They got in there, or the EA got them in there, the EA got them in there. The target is set there. They're at work. So their decision-making process is taken out of their hands. People that don't watch charts tend to be more profitable because price action doesn't scare them away. Price action just happens, and the original thought process just plays out. It's totally discretionary, isn't it? But it's based on what's going on. Yeah, we've got hurricane hitting America at the moment. We've got a war breaking out in the Middle East, and we've got probably the most important number coming out this afternoon at 1:30 for the US we've had for quite a long time. Yeah, I'm just making decisions based on what is going on at the minute. But EAs, when you backtest them, they haven't got a clue. I showed in the member stream yesterday a P&L. What's the time? 37. Got plenty of time. I showed this yesterday in the member stream because we've been testing a strategy, which is one that a guy, Alexander, came up with in the lives. And it basically is trading indices. And with all indices and all testing, back testing that you do, you're going to have a problem in 2020 in that you're going to have this. And this here will vary depending on what you do at that moment. This is COVID. Yeah. There are variations of this strategy that I've run that lose somewhere between 10 to 40 grand. Yeah. At that point. At that point in COVID, what I did was the positions that I was in at the time, I saw getting bigger and bigger and bigger in drawdown. So I hedged everything because we had something happening, and you could see in the market, you had this parabolic day followed by a parabolic day followed by a holy crap, something's going on, and I hedged. That's my decision. The people that didn't hedge would have been wiped out. The people that went flat when they saw something going on in Italy and them locking down weren't affected by it. But this is all discretion. Everything that happens is discretion. So you've got to be able to make these decisions. Yeah. So that one there, I think, that's a big drawdown. That's $1,900 in profit, and it drew down to negative 150. Yeah, it made a nice recovery after it, as you would expect, because it's just a black swan. But the decision-making process there is what you do, not what anybody else does, and that's what makes you profitable or not profitable, basically. Whoops. But yeah, I don't know. There's no answer. I wish I could give you a clear. If it's less than 0.25%, don't touch it. But it doesn't work that way. It can do, though. That's the thing. It can do. If you have a rule that says I will never take profit on anything that is below, for me, $250, do it. It's not going to hurt, is it? It's just going to be what you are doing. It's no right or wrong. I see you use RSI 10 and RSI 21 on Dash. Did you change from 14 to 10? Yeah. Yeah, a while ago. Just because the market's a bit more contracted, has been a bit more contracted. But again, FTNet, which is the best one to use? 14 or 10 in the future? Which is going to be the best one? Which is going to give the best results in the future? Don't know. I'm looking for the market to be extended. That's it. If I use a 14 or a 10, I'm going to get different entries, different trades. Someone trading 14 now will not be in that trade on the euro odd. If we change that to a 14, you won't be in it. Yeah? You didn't get a signal above the 80 line. I did. Does that mean you are missing out? No. If this thing goes parabolic up to there, well done. The 14 is the right one to use. If this thing comes down today and gets me out with a nice little profit, unlucky. The 10 was the right one to use. Which is the right one to use next time? I don't know. It's curve fitting, isn't it? This is why, we've been covering in the live room, in the member streams, haven't we? Robustness testing. This is why we do robustness testing. I know that the 10 works. I know that the 14 works. I know that the 70 works and the 80 works on both the 10 and the 14. I don't know which is the right one to take the next time the market gets extended, but I know they all work. So it doesn't matter which you use, does it? It just means you're going to get in and out at different times depending on which one you've used. There is no right or wrong. There's just different. There always is different. That's all there is in trading. Something is different to something else. Morning, Neo. Morning, Pot DJ. Take what the market gives you. Yeah, exactly. That's the biggest light bulb moment for most people is understanding that no control. Yeah, you haven't got control over this thing. You get in, and then the market will give you a result, and that will either be a positive or a negative. How you deal with the positive and the negative is how you make money. That's it. If the market gives you money, take the money. If the market doesn't give you money, adjust your positioning to get money out of it the next time it decides to give you money. Because all it does is go up and down, and your job is literally just to get out when it's got some money on the table. And manage the drawdown that you go into and control your risk. That's all you have. I kind of need to do a video on... I've done a video on it. I've done so many videos on it. You can say the same thing in many ways. I've got the You Are Not in Control video. Yeah, people watch that and go, well, I know that. Well, no, you don't, because you're still using stop loss strategies. You're still, there's no control of the market, and the market is random and it goes up and down, yet you still put orders in to lose money. Why do you do that? Well, because I've got to manage risk. Just reduce the lot size. Yeah, but then I won't make any money. Yeah, but you won't lose any money. What's your job? Making money. Bingo. Do you have specific criteria when scalping out of an SIH? No. Well, yes. Support resistance, basically. So, hedged on the FTSE as well. This week is hedge week. So here we go. Prime example. Good time to ask the question, Tom. Here. Today. Again, this is what we're covering today in the member streams. Levels. It's going to do one or two things as far as I'm concerned today. It's going to hit that and it's going to bounce, or it's going to bounce and push through, or it's just going to slam through it and it's going to come back down here. There's limit orders here. I know there's limit orders here because the market's bought it 4 times. So as the market's bought it 4 times, there'll be limit orders there because everybody that's bought here is going to defend that area. So I'm looking, when you're hedged, you're not looking for a profit, you're looking for an exit. Yeah, the trade hasn't worked today, so I need to get out of it. I've got a hedge locked in. What I'm looking for is a bounce which is large enough to get me out of that trade. That's it. It's not worked. It's not payday today. Well, I'm not on this two. On this afternoon might be payday, but it's not payday on these two. So I'm looking to get out. So I'm looking for levels that I know there's going to be orders at. There's going to be orders there, but that's too close. If I get out here and it screams down to there, I've got to re-hedge it and double my loss. So I'm now interested, because the market has no directional bias at the open, I'm now interested as, is it going to go today or not? If it doesn't go today, I'm not making any money. You make money on the days it goes, which is usually 2 to 3 out of 5 days, it will clean break. The clean break days are where you bank. The hedge days are where you don't bank. If you can get out the hedges and bank with either a small amount or a break even, you're increasing your edge. That's it. But I'm looking for levels. So the market is range bound at the highs. There's limit orders there. I can see them on the chart. So if it breaks up to there, which is easy to do because it's within ADR and that's a double weekly high, which is going to have limit orders at it. If it breaks up to there, I'll get out. That's it. If it breaks down to there, I'll get out. It's also ADR. It's the previous day's low and yesterday's low. So we've got yesterday's low and the previous day's low, which will contain limit orders, at a weekly low and a weekly low from 3 weeks ago, which will contain limit orders. And it's an area they bought up 4 times. That's it. I have no idea where it's going, so therefore I'm not going to make any decisions. But if I see something like that, a big propulsion move, which creates a propulsion gap, and a retest, and then a bearish price action pattern, I may well exit the shorts and anticipate taking, exit the longs, and then anticipate taking the shorts off there. That's exactly what I did yesterday on the Dow. I have to remember which one it was. So this play here, yeah, this is what I saw yesterday. Again, discretion. Yeah, you've got to use discretion. So hedged, I saw it break up. Yeah, my target was here, which was a weekly level. I saw it break up. It pulled back down. It created a propulsion gap at the open. And I saw that whacking great price action candlestick coming in, which is a very big bull order. And I was like, this looks like it's going to pop. It's going to be market structure long. So I exited the shorts and waited to see if the longs played out. If the longs didn't play out, I would have re-hedged it there. So I'd have put another short on there and re-hedged it, which means I'd have locked in that much loss and I'd have locked in that much loss. So I'd have 2x to my loss. So I'm doubling my risk, but I'm still hedged. And then it buys me time to think, right, what the hell we're doing now? And I'll try and find another exit at a later stage in the day. It's a very slow strategy, the SIH strategy. It's much more suited to people that don't want to be scalping and under pressure all the time. It just buys you time. Like today, I'm sitting here waffling away. Someone said to me as well yesterday, and I think it was in the members group, or I can't remember where it was, but someone said to me yesterday, you forgot to check the stock indices until about half an hour into yesterday's stream. And I was like, yeah, because the EA's taking care of it. Because it's either going to work or it's not. If it doesn't work, I'm hedged. If I'm hedged, I've got as much time as I need to figure out what the hell this thing's doing today. Do some analysis. Look at where price might be going. That's the beauty of it. If you're using the opening range breakout EA or the opening range breakout strategy, you're in, you're wrong, you're stopped out. You're in, you're wrong, you're stopped out. You're looking for entries and exits all the time. It's much more stressful. I prefer relaxed trading. This is why I position trade, because I can press the button, go away for 2 days, come back. Even if it's gone against me for 3 days on the trot, like the US dollar CAD, it's gone against me for 7 days on the trot. Holy crap! I'm in 3% of drawdown. In not in 7 days, but in how many days has it been? I've been in this 4 days. So 4 days a minute. I'm in 3% of drawdown. Yeah. So it's a relaxed strategy because unless it goes parabolic 3 ADR 2 days in a row, which, let's face it, I don't think I've ever seen it. Maybe once or twice. Then you've got a problem. But that's COVID, yeah? Which is probably what I've got at the moment. What would you say is a good year and a bad year in terms of percentage returns for myself? 120% is a good year. 150%. A bad year, I'm going to go with this year. 50%. I'm not there yet. I'm about 40% this year. That's a bad year. I'll be signing up to the members group next week. Cool. But that's, and this is why I keep saying outro, yeah? All these guys sitting there with their Lambo streams and courses and all this crap that they go, yeah, I've turned $1,000 account into a $10,000 account in 6 weeks. Good luck sustaining that, mate. Yeah, so you've done a 600% return or whatever, I don't know, in 6 weeks. Yeah, I make 120% a year, and I'm pretty good. Yeah, making 10% a year is a month is a result. Yeah. You go and look at most traders that are actually trading and making money from this thing, they aren't making anywhere near 10, 15, 20% on a consistent basis. Neither am I. I have losing months. I have 25% months every now and again. And these are the months where it all just goes and it works. And then I have months where I lose 5-10%. Yeah, my P&L doesn't. My P&L looks exactly the same as that quant analyzer I just showed you. Yeah, this is a healthy P&L. This type of P&L is exactly what a proper P&L is. Was the Dow good? I can't remember. Yeah. I mean, this isn't great. This actually doesn't work very well, this strategy on the Dow. It's much better suited to the NASDAQ, because the NASDAQ is obviously tech stocks. Tech stocks are trending massively at the moment. But yeah, every single year for 8 years, solid winners. But losing month, losing month, losing month, losing month, losing month, losing month, losing month. Yeah, we don't win every month. You can't win every month because market conditions are not going to fit the strategy every month. If you've got a breakout strategy and the market does that for the entire month, you ain't making money. Yeah, if you've got a mean reversion strategy, you're killing it. If it trends for a month, mean reversion strategy, you're going to have a down month. But when it goes back into mean reversion, into range, you're going to have a killer month. Yeah, it's the way it goes. You have winners, you have losers. You have I've never had a year where I've had 12 months winners. Never happened. It'd be lovely if it did. Certainly ain't going to happen this year. Maybe next year. Regarding the RSI settings, after listening to you discuss it over the weeks, I've decided to just stick with the 14, 70, 30. Yeah, it's fine. Stick with one. It doesn't matter what you do. I tweak it every now and again, the RSI. Just if I see the market conditions very sideways, I will tend to speed the RSI up a little bit. Because the way I kind of gauge it is if I sit here in the live streams, and this is one of the other reasons I do these. Somebody asked me in the members stream the other day why I do these streams. And it's to keep me in check, partly, but also so that I've got my finger on the pulse. I'm in here every day looking at the news, and it keeps me like regular, like clockwork. And I make sure I check the news every morning. I check every pair every morning. I understand what's going on in the market, what's moving, what's not. I'm following fundamentals. If I didn't do streams, I'd probably get lazy and couldn't be asked to watch the news this morning. I won't look at the news today either. And then before I know it, 6 days have gone past and I haven't looked at the news. And I'm wondering why the US dollar's gone parabolic, because it's been in the news. What's going on? Yeah. But this thing here is how I decide what changes, if any, I ever make to RSI. And it's very rare I do. But if I sit here for a week or so in streams and I go, there's no RSIs to look at on the hourly, there's no RSIs to look at on the 4 hourly, there's no ADRs. If I sit there and I say that for days or weeks on end, it tells me that the market is not going anywhere. It's in contraction. We're waiting for something to happen. So I might move my RSI to be more sensitive so that I start getting some entries. Because at the end of the day, if you don't enter the market, you have no risk on. If you have no risk on, you cannot make money. You've got to have risk on. This job is basically taking risk. Without it, you can't have profit. So you've got to have an instrument that gives you a condition in the market that you're happy to get into. I've just looked at that exit on the US dollar CAD. What a shocking exit. If only I had that DeLorean. But anyway. So there we go. That's all I've got for today. Members stream is starting in 5 minutes-ish. Identifying good trading levels, when not to trade, and possibly targets and exits. We're going to go through that strategy as well. We're going to go through the one that I've just shown in Strategy Quant. I'll load it up, actually. We're going to go through this strategy that I built an EA to test yesterday. I put the EA in the members group for everyone to go and test with. So we'll go through this strategy as well today and how it performs. And it's got some potential. I made a portfolio of the US indices and it's pretty good. However, if you remove COVID, and this is the thing, you know, like I was saying earlier, if you remove COVID from this and look at the equity curve, it's bloody good. But look at the last 2 years. Stagnated for 2 years. So, although it looks like a good strategy on paper, you really made the money in the COVID run-up, the post-COVID run-up. That sort of 2 years, 2020 to 2022, is where it made the majority of its profit. It was okay, died, can't survive COVID if you're long only on indices because the indices collapsed. And then it had a lovely run. But look at what happens in a bear volatile market. You can't trade it in bear volatile market. So it needs a filter added to it. And unfortunately, if we do go into a bear volatile market, you ain't going to make any money with it. So it's an investment strategy. It's long term. But we'll look at it in a bit more detail. Right, there we go. That's all I've got for you today. So hedges on the FTSE and the DAX are all in place, ready to get out as and when. Be careful this afternoon with US indices. So at 1:30, we've got CPI. If the market goes on CPI and we've got ADR hits, just be careful because that is the market making its move today. Therefore, at the open, you're probably not going to get an opening range break. You're going to get possible accumulation because the market will have done its movement today on that news rather than at the open. So if we've got a whipsaw type move, which potentially we could have as well, then it should be fine. But if it's, if we're sitting at 150 ADR on everything, it's going to be quite a difficult open. It may completely retrace. It might be a non-movement. It might just be a knee-jerk reaction that gets undone, in which case you get a lovely opening range break. But again, your choice, whether you try and trade the open today. But obviously bear in mind there is a limited amount of stock purchasing goes on every day. If they do it all at CPI, they ain't got any left at the open, have they? So be aware. Right, that's it for today. Anything you need, let me know. I'll be in Discord. Otherwise, I'll be back tomorrow, same time. We'll do a complete recap of the week. Tomorrow, we'll have a look at what's going on. And bear in mind, we've also got tomorrow GDP before the stream. So any pound positions you're in, get them closed or protect them ahead of GDP because we might have a movement off of that tomorrow morning. All right. Have a good day. Members, I will be in the stream in about 5 minutes. So we'll see you there. All right, have a good day.